Greetings everyone and welcome. This is Neo and you are watching FinTech. If you enjoy our content, please do not forget to leave a like. You can subscribe and hit the notification bell if you want to be informed about our later videos. If you have any questions, you can leave a comment down below. Before we start our video, let's hear our legal disclaimer. None of the information given in this video should be taken as financial advice. Please make your investments according to your own research. This video is brought to you in partnership, and FinTech channel has been compensated for producing this content. Again, please note that the information shared in this video is only for educational purposes and it does not include any form of financial advice. Investing carries significant risk and I suggest you to do your full research before investing in anything. The full disclaimer for this video can be found in the descriptions of this video. What if I tell you today we're going to talk about a stock that has outperformed Bitcoin on multiple occasions through years? And what if I tell you they are now operating in bigger scale and on a bigger stage because they have graduated to NASDAQ? The ticker symbol is DEFT. And if you're an avid crypto enthusiast, you already know that this is DeFi Technologies and they are now on NASDAQ. I bet most of my viewers know Eric Jackson of AMJ Capital and who has been extensively writing about DeFi technologies for several years and even these days, and actually for a good reason. But before we talk about what are these reasons, let's take a look at last year. On the 19th of November 2024, Tom Lee amplified a post by hedge fund manager Eric Jackson I talked about on X discussing DeFi technologies. At that point, the company had not yet joined NASDAQ, its share price was $2.28, and fast forward to mid-July 2025, and DEFT trades at $3.25, reflecting a remarkable growth trajectory. And they have been performing very well since then. Since May 31st of 2024 actually, DEFT has consistently been among the best performing stocks on the market. For context, during the same period, the QQQ ETF rose 22%, which is, well, it's not bad, and Bitcoin climbed 50%. DeFi Technologies far exceeded both of these. While on year one, Bitcoin rose 76%, DEFT 122%. Second year, Bitcoin 238%, DEFT 3,500%. In terms of detailed price comparison, in 1 year, Bitcoin rose 76%, while DEFT seen 122%, which is quite a big jump. 2 year, Bitcoin 238%, which is real nice, and DEFT 3,500%. Year 3, Bitcoin 339%, DEFT 793%. 4 year, Bitcoin 225%, where DEFT DeFi Technologies 339%. In 5 years since the 2020 July, which is the IPO, Bitcoin 1,000% and DEFT nearly 10,000%. And this performance is not for nothing and is not a fluke. Very few assets in this space, whether traditional stocks or digital currencies actually, have managed to outperform Bitcoin, which is the most popular, most wanted. And they have done it over multiple years, actually multiple consecutive years, because such a consistency cannot be luck. So what is the reason behind their success? DEFT is not merely a Bitcoin proxy, let's call it. The company operates across an entire decentralized finance ecosystem with growth opportunities spanning to multiple cryptocurrencies and regions, importantly. And recent quarterly results, as you can see, were record-breaking, yet the stock trades at a trailing PE ratio of 9, well below comparable companies in this sector. And actually, for me, DeFi Technologies' growth potential appears virtually unlimited. It is profitable, expanding internationally, and well-positioned to meet increasing demand from both retail and also institutional investors as decentralized adoption increases. And I think very smartly, they also have subsidiaries. And I think the most important one of them all is the Valour, because I think it is the most critical driver of the ecosystem. Valour issues exchange-traded products, ETPs, currently numbering over 75 across Europe and UK, covering the full range of cryptocurrencies. And these ETPs offer regulated exchanges exposure to digital assets, particularly appealing to institutions that cannot hold crypto directly, but can invest in ETPs. And as of May 2025, Valour managed $800 million in assets. And beyond management fees, it generates additional revenue via staking and also lending, earning around 8% annually, a model unique among crypto-focused asset managers, and that's why Valour is important. And a prime example of what they're doing is actually Solana ATP, which has become Valour's largest offering at 274.9 million AUM, ranking third among Solana funds in Europe. DeFi Technologies, as Valour's parent, is now the largest institutional Solana manager in North America, earning 8.5% yield on staked Solana, generating roughly $33 million in annual revenue, more than any other public holder or asset manager globally. The more I tell you about it, the more you understand why they were outperforming Bitcoin, but that's not the end. Because macro factors are also favorable. The Trump administration has prioritized digital assets, as we all know, appointing David Sachs as a crypto czar. And executive orders issued in 2025 January, basically beginning of this year, and March, established the president's working group on digital asset market and created strategic Bitcoin reserve and US digital asset stockpile. And these initiatives were really important for crypto enthusiasts and crypto investors. And also, these initiatives treat major cryptocurrencies like Bitcoin, Ethereum, XRP, Solana, and Cardano as strategic reserves, similar to gold, bolstering regulatory clarity to adoption. And given that the regulatory atmosphere is improving, it's no surprise that DeFi Technologies were using that. Because prior restrictions has been lifted, the SEC is developing a comprehensive crypto framework, and banking regulators are reviewing limitations on blockchain-based payments, all of which benefits companies like DeFi Technologies by enabling product expansion and greater institutional applications. But it's not all about US. DeFi Technologies is executing globally, and the acquisition of Stillman Digital enhanced its US institutional trading capabilities. Valour, on the other hand, is expanding into emerging markets across Africa, Asia, and Middle East, aiming for a first mover advantage. The target is 100 listed products by the end of 2025, up from fewer than 30 in mid-2024. And when I look at DeFi, I think it is really important and vital for all the viewers and investors to understand that DeFi Technologies' quantitative edge, particularly with Solana. And when I'm looking at DeFi Technologies, I think it is really important for you, for viewers, and for investors to understand that DeFi Technologies has a qualitative edge, particularly with Solana, as I've mentioned. The company operates validator nodes on multiple blockchains, including Core and Cardano, applying its yield generation model across nearly 771 million AUM. The average blended yield on staked assets is around 8%, as I've mentioned, generating substantial recurring revenue. I think this is one of the most important aspects of DeFi technology. And Reflexivity Research, probably some of you know that, which is co-founded by shareholder Anthony Pompliano, and it is also included in DeFi Technologies, produces institutional-grade crypto research and has partnered with Beluga, a leading crypto intelligence platform, to expand its distribution. And another notable division is DeFi Alpha, and this firm's specialized arbitrage trading desk. It was launched in the second quarter of 2024. It has produced roughly around $100 million in shareholder gains during its first year. I mean, if these numbers doesn't tell you that they are being managed really well, I don't know what does. And a single 2025 May trade generated $22 million. And these are zero-risk strategies executed across centralized and decentralized markets with profits retained on the balance sheet. And I mean, think about this. Trading Desk generates $100 million in its first year, directly adding value to the company without requiring any addition from the stockholders. Actually, stockholders don't need to take any actions. Analysts have also taken notice of this, particularly after DEFT's NASDAQ listing, and many now cover the stock. You can even request analyst reports by email if you're really curious about DeFi, if you're a nerd about it. And I think the more you dive into DeFi technologies, the more nerd you will be about it. Because why not? Today, DeFi Technologies is one of only 3 profitable publicly traded crypto companies. As I've said, it has outperformed Bitcoin, not 1, not 3, not 4, but 5 years consistently. And its operations span dozens of leading cryptocurrencies, multiple geographies, which I think is very important, and new markets. And with ongoing product growth, favorable policy tailwinds, and a strong management team, DEFT really represents a rare opportunity for institutional grade exposure to the decentralized economy. And strategic investments actually further bolstered their portfolio. For instance, DEFT, DeFi Technologies, invested around $27 million in Amana Bank of Switzerland when the bank had 1 billion AUM. And by 2024, Amana's assets grew 136% to 4.2 billion revenue, rose 69% to $40.4 million, and it achieved quarterly profitability with operations in Abu Dhabi and Hong Kong, showing triple-digit growth with 0 loan defaults. And the balance sheet is also very solid. As of the end of June this year, the company held $62.4 million in cash, USDT, and other digital assets, including a diversified $48.4 million in their crypto treasury. This includes BTC, which gets the biggest share. They have 208.8 BTC, which equals to around $22 million. They also have ETH, ADA, SOL, AVAX, Core, SUI, and they also have additional holdings in smaller portions and in smaller companies. And the management of DeFi is also heavily invested, with insiders owning about 33% of shares. Co-founder, CEO Oliver Rosen-Newton holds nearly 18 million shares valued over $50 million. Newton has been active in crypto since 2010, from early mining ventures to building the first publicly traded Bitcoin and Ethereum mining company. Actually, his vision for DEFT is to become a mini BlackRock in the crypto and blockchain sector, which is, well, it's saying a lot. And overall, I want to say that again, DeFi Technologies ranks among only 3 profitable public crypto companies. And they have repurchased 2.5 million shares in the past year and provides investor exposure to a diversified, institutional scaled crypto portfolio and ecosystem under very, very well experienced leadership. And I think that is the key for DeFi Technologies. And all of these things I've said couldn't be managed without a good management at the back and a great mind. If you want more information on DEFT and DeFi Technologies, which is now on NASDAQ, you can check the links down in the descriptions of this video. That's all for this video. We'll continue to bring you the latest news and promising projects. Stay tuned. Thank you for watching FinTech. Until next time.